Major funding for these broadcasts has been provided by grants from New York Community Bank, Capital One Bank, Eastern Consolidated, M&T Bank, Sterling National Bank, Meridian Capital Group, the Wickoff Organization, Ariel Property Advisors, Chase Commercial Term Lending, Chase Mortgage Lending, Perfect Building Maintenance, Genova Burns. Additional funding has been provided by AKA Hotels Corming Communities, AmTrust Title Insurance Company, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Cohen Equities, Colliers International NYC, Collins Building Services, Connect One Bank, CPEX Real Estate Services, Dime Community Bank, Douglaston Development, Levine Builders, Flushing Bank, Friedman LLP, Handro Properties Handler Real Estate Organization, Hodges Ward Elliott Inc., iFunding, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, New Banks, Newmark Grubb Knight Frank, People's United Bank, Polsinelli, Rosewood Realty Services, SJP Properties, Stonehenge Partners, TD Bank, Terra CRG, the Knackle Group at Cushman and Wakefield, the Moynihan Group, and These Friends.
Ooh, Crystal Apple. Oh, tell me what the market's going to be. How are investment sales in 2017? New president, lots of things, new mayor. Where are we? You don't tell me, I know the answer. So today I've assembled this leading group of investment sales professionals to provide their insight on where they see 2017. My guests include the Dean, Tim King, who I also call the mayor of Brooklyn, who is the founder and managing partner at CPEX Real Estate Services. From the borough of Queens, because that's where he spends a lot of time, Tom Donovan, who is the vice chairman at Cushman and Wakefield. From Westchester, but originally a Brooklyn transplant, David Schechtman, who is the Senior Executive Managing Director at Meridian Investment Sales. And last but not least, the guy who also grew up, I believe, in Canarsie or in Brooklyn, okay? The guy who hustles and continues to work took us off, my buddy Aaron Jungreis, founder, CEO of Rosewood Realty. So, I got a couple of Brooklyn boys here. Were you born in Brooklyn?
I was not. My family's from Bed-Stuy, though.
That's right, okay. So how do we see the world? I mean, is it going to be shiny? What do you see?
If my crystal apple worked that well, I'd be at the track, not here. But if you're asking for an opinion, I think that we've seen 16 be a very significant transition year. And I think going into 17, you're going to see that transition accelerate. And hopefully at some point...
But when you bring a transition, Timmy, here's the point. If you look at 16, certain people and everybody say sales may have been down, but when you compare it to 2009, it's still a great year.
So 8 and 9 were transitions as well. And in between, say, 9 and 15 or 16, there were some good times. We're now going through the transition. And I do think that panoply of events you talked about, whether it's hopefully a new mayor, we have a new president, there's stuff going on. And I do think that you're going to see an uptick in activity and the equilibrium start to get closer, where sellers and buyers' expectations get less cognitive dissonance than you see today.
I mean, I did a show the other day, and I spoke about Newark. And I know that's not your market, but I just want to bring out, I mean, if you would have said to me or to anybody that a Kuwaiti investment fund would invest and buy a office building in Newark for $500 a foot last year, they'd say you're out of your mind. But it took place. Newark is changing. The world is. People still want to invest and own property in New York or the metro area. I mean, how do you see it today?
I still have a rosy outlook for 2017. I don't think it'll be like 15, but you still have a lot of guys in 1031s. We still have a lot of buyers who have Israeli bond money. We still have guys coming in from Montreal, Toronto, foreigners. Kids from different states still want to live here. We're still in New York, and multifamily is still safe. There are definitely more deals falling apart now, but there's so much money chasing these deals that I see a very small drop-off from last year. Very small.
Well, I would add two major factors. I agree that there remains always a buyer for all product types in New York, but I think two things are actually going to bolster the market in 2017 more so than previously. The first is some public works projects. You have $8 or $9 billion of changes, depending on the day, being invested in East Elmhurst, Queens, LaGuardia. Who would have thought? You talk about people buying buildings in Newark for $500. Well, who would have thought that $9 billion of federal money is going to go into an airport and the surrounding environs?
It's going to help my buddy Mr. Donovan because he specializes in Queens.
It most certainly is. But you also have, that's coupled with the realization now that New York City real estate, it was, for many years, it was Manhattan. And then in 05, 6, 7, 8, we moved to Brooklyn and Queens, and now the Bronx is hot. And heck, you even have some major projects happening in Staten Island. So the continued desire and the rush to quality and the need to be in New York City and the fact that there's more choices and more buy opportunities in New York, that will bolster the market. But we are definitely in a changing market.
Like Aaron said, there's a lot of international money still coming into New York. And with all the craziness going on in the world, New York is still a relatively safe investment for wealth preservation, not necessarily just growth.
Many people are not looking for the instantaneous profit, okay? It's still the interest rates and the market went crazy, after the election and everything's fine, but nobody knows what the future is going to bring. When you have an asset such as real estate, a well-positioned real estate asset, if you keep it long enough, which I always say, something that I didn't do early in my career was to invest. I tell all the young people I know, go in and buy some real estate, take an interest. Don't you agree?
If they can, they should, 100%. But let's just go back on what everyone around the room said. The notion, Aaron, that there's the supply and demand, out of whack. It's been that way, in my opinion, for as long as I've been in this business. There's always been more money chasing transactions than available properties. The fact that people are spending money in the outer boroughs, why is Newark attractive to someone? Back to supply and demand. There was a time when, to Aaron's point, Manhattan was the only place. Then, as the circle spread and Brooklyn and Queens became desirable and, in fact, expensive, now people start to look a little further afield. And all of a sudden, Jersey City and Newark, the success of New York and the outer boroughs is what enabled people to be even looking across the Hudson River.
A couple of months ago, I had Tom on the show. We were talking about Bushwick and Ridgewood and Queens. And I recently did a show on transit-oriented developments. Anything that's near a train, and that's why Newark is doing well. Mm-hmm. See, that's why I may disagree a little bit with David on the Staten Island. Now, I believe that parts of Staten Island closer to the ferry have the opportunity because if you work downtown, it's a 10-minute ride. But we have a member of the CUNY TV staff who lives in Staten Island, and for him to get to 34th Street, it takes him an hour and a half. So that's not convenient. So it's transit-oriented development. I mean, we were talking before about Lefferts Garden, which was a neighborhood. Mm-hmm. 10 years ago, nobody was running into Lefferts Garden. Today, that's prime property, right, Aaron?
Lefferts Gardens is very busy. We're doing a lot of deals in Lefferts Gardens. A lot of transplanted Manhattaners are going there. But I also want to go back to Queens. Last year, we actually did more in Queens than in Brooklyn. And I think Queens is going to have another banner year this year.
Why are investors that bullish on Queens? I mean, I have you, the king of Queens, but I'm going to ask you.
First of all, you have great trains. Astoria, Long Island City, Sunnyside, and it keeps going out further. Woodside now is getting hot. We're doing a lot of deals in Woodside, Jackson Heights, even Elmhurst. East Elmhurst and Elmhurst, but the Elmhurst part that's near a train. Elmhurst, I don't know if it's really right near the train,
No.
but the part of Elmhurst that's near the train, people are going from Manhattan or going even from Brooklyn because it's still a cheaper alternative. Brooklyn used to be the cheap alternative to Manhattan, and then Brooklyn became its own borough and the place that people want to go as a destination. Queens is slowly becoming that.
Like Aaron said, it was a cheaper alternative to Brooklyn. And now, as the neighborhoods that transitioned to Long Island City's, Astoria was always good, but Sunnyside, Elmhurst, we're starting to see neighborhoods that were sexier at one point, that kind of moderated, like the Regal Parks and the Forest Hills, gentrifying again. So along the subway line, good transportation, there's no bad place in northern Queens, none.
Michael, there's one other huge factor. You know, Queens for many years was a sleepy bedroom community. Think 70s, 80s. And then it became a place of commerce. Queens Center Mall and places to go shopping and great ethnic neighborhoods like Flushing. Well, now people are not just living and shopping, but working in Queens. You have office product coming online, and it's still one of the last remaining places. Well, every borough has it, but there's still light manufacturing, and there's still a lot of M-zone property to be had in Queens.
You know what? Bringing out manufacturing industrial, over the last 5 years, and everyone over here has sold something in the industrial market over there. Industrial has done well, but everybody today, many developers have this concept that that any industrial property can be converted to office, which I disagree with. And also, as I said, even on my Newark show, I said, you know, you can't take an industrial property which had no loss factor and all of a sudden you're making it a 25% loss factor. How do you see industrial trading over the in this year, Timmy?
So you're right. Lots of folks have done a lot of work with industrial, and all of it has been in that value-add conversion to create either retail, some sort of hybrid of light manufacturing, live, work, whatever. I think that product is clearly in strong demand. I agree with you that the concept of every space can be an office may be somewhat overrated. And I look at some of the projects that are going on kind of further out where people are buying a 100,000 square foot office building and expect they're going to fill it with tenants. I think that sort of development is having a very odd and strong effect on the traditional office space. You know, my office leases a lot of office space. We don't get many calls for people that want to be in, let's call it your father's office building. People want to be in that alternative, grungy style space.
A little bit like him.
There you go. And it is having an impact on the classic office buildings that it's harder to find. You know, think about a guy like, let's talk about Dumbo, where 20 years ago, Mr. Valentis was a visionary, created his own world and was the emperor of that world. I suspect he's experiencing considerable competition today. The people who thought Dumbo was cool 20 years ago, today Dumbo's a victim of its own success. Those folks are going to Bushwick or Greenpoint and going into some old sewing factory.
But can I make a prediction that you're going to see something this year and you're going to see it repeated throughout the year, and you're going to see it increase? I go as far as 2018. You're going to start seeing these loft office to residential conversions, whether it's rental or condo. You're going to see people abandon those plans and convert loft office to industrial, logistics. There is a
very valid point.
Tremendous need.
Because
we
of
have
warehousing,
condominiumed, and I believe that we're going to absorb all the product, but that's another subject. We have condominiumed ourselves and loft officed ourselves out of existence. I believe Dumbo Heights will succeed, may not happen as quickly, but where are the M13 light assembly, non-environmental uses? Where are the warehouses? Since retail has changed galactically, and brick and mortar retail has changed.
I have a strong opinion on this when you're done. Collectively, what everybody just said, I agree with. Right now, manufacturing, people are looking at it in all different uses. Could I make it into a restaurant? Could I make it into a funeral home? Could I make it into these live workspaces? Could I make it into an artist kiosk? Studio space. A lot of them get absorbed for sound stages. Retail, going away from traditional retail other than nail salons and hair salons and and psychic readers and such, and they're going to these Amazon-type distribution centers. So a lot of that M stuff has been absorbed. When you do get one, we used to sell them at $80 a foot. Now they're selling between $300 and $400 a foot. Reason being, 80% of the stock was taken away or reused for whatever. So the stuff that does exist, when you get one of them 5 to 20,000 feet that come on the market, people come the same day, say, when can I sign a contract and close? Because they have nowhere to go. So it went from being an asset class that we couldn't sell to I welcome any one of them.
But you know, if you take an example what Tim's operation did on the leasing side of, you know, Marvin Shine's property, and they put in Saks off Fifth Avenue, and they put in Bed Bath & Beyond, you know, the superstore with all the other opportunities over there. They've taken industrial and made it into retail. So it's smart utilization over there. So somebody, you know, when somebody buys a property and they have foresight of what they can do with it, you know, the initial owners of Industry City and Bush didn't have the foresight of all of it. And look what's happened now, you know, with the food courts and everything else and the restaurants. So, I see different market. With regard to retail, you know, you guys sell retail properties. And, you know, how do you see the retail world?
The retail right now is terrible. We're not doing that much retail, but the retail that we have is sitting on the shelf. And as far as David goes, he does a lot more retail, and anyone who couldn't use galactic in a sentence, I think, needs to respond.
So?
Retail is challenged, but it's a tale of two retails. Occupied retail with anything from mediocre to excellent and credit tenants will still trade. Retail condominiums in Soho, provided there's seller capitulation. Cap rate expansion exists in the 4 boroughs where retail trades, provided there's some recognition of cap rate expansion. You're not going to sell a flat 3 cap in Manhattan. You're closer to a 4 cap plus, provided sellers willing to do that. There's always a buyer for retail. That's the tale of one retail. The tale of the other retail, which Aaron said is terrible, and I don't want to mischaracterize what you said, I would say is challenged at a minimum, is vacant retail. Buyers are not accepting rosy projections. There are full block fronts in New York City on major avenues, and buyers are building in negative growth in their projections, and sellers are not willing to accept that yet. And I think there is a disconnect in vacant retail. You will see a lot of vacant stores, and you will see retail lie fallow for 1 to 3 years.
Look, e-commerce has definitely had an effect on retail, but as I've said in the past, certain e-commerce entities, and if you look at it this way, Amazon is now moving into the Time Warner Center. Warby Parker has about 7 or 8 locations. Barnabas is opening up. So people are opening up additional retail, but there are small stores. They're not building large stores. You know, Timmy and I are old enough to remember when the Gap came in here, and they were on every corner, and everybody said, and every bank said, I have no problem, I'll take a 15-year lease with the Gap. What happens is the 15 years, they're no longer there, so they have vacant retail. So you look around, you see this type of situation, you know, and I'm not, you know, certain people believe that Planet Fitness is a credit tenant. David Barton's gyms just went out of business. So, you know, it's a different type of thing. I think on retail, one of the opportunities for investment property is with the urgent care centers, because the emergency rooms are being phased out and the urgent care opportunities are there. How do you see land? Okay, at one time everybody wanted to own any type of land in New York City. Okay, you know, where is vacant land available today? There's vacant land in Inwood. There's vacant land in certain parts of Brooklyn, Coney Island, which I'm not that overly enthusiastic about because of the transportation. How do we see land, David?
Michael, you know that there was a Chapter 11 bankruptcy on the Upper East Side of Manhattan recently. There was 250,000 square feet of vacant as-of-right land to build a high-end residential condominium. I think without coloring it, it traded at 50 cents on the dollar from just 24 months ago when there were bona fide offers from $800 to $400 a foot.
And even at $400, still expensive.
At $400 a foot, what's driving it are two things: sentiment and lenders, even for Tiffany developers today, because there is, for the first time in many years, uncertainty across many lines of influence. Land will lie fallow. You will see blue sheds around development sites in Manhattan, Brooklyn, Queens, and the Bronx, and you will see them either change hands or just sit. You will see tumbleweeds on land for 1 to 3 years. Not even a question.
I don't think tumbleweed is indigenous to the 5 boroughs.
They will be imported from a 100% organic store.
People call me up, who watch my show or view it around the world, and they say, what do you think about the Bronx? Jeff Levine made a very interesting comment about a year ago on the show, and he said, the Bronx is fine, but when you still have crime and murders taking place in certain parts of the Bronx, it's a difficult area. I mean, the housing stock in the Bronx, it's still strong, it's old, you don't have the conversions like you have in Manhattan, where you take a large 1-bedroom and make it a 3-bedroom in the Bronx. But how do you see the Bronx with regard to residential, and how do you see that as an opportunity for development?
Residential is still very busy. People are still, a lot of Brooklyn guys who can't buy in Brooklyn because they're frozen out because of these 3-cap deals, they're buying in the Bronx and they're taking a 4-cap deal. And the multiples, which were trading for 9 and 10, are now 12 and 13. It's flattened now. It's not going up, but Jeff is right about the crime issue, but there are still pockets in those crime areas where it's right near the train and there's a good retail strip and people are still moving there. Yeah, there's still growth in the Bronx. It's sort of flattened though.
You made my point, which I was going to say that you mentioned earlier the 4 boroughs where stuff trades. So think about it. Manhattan is priced out. Then Brooklyn became cool, priced out. People went to Queens. Bronx is now the last frontier, if you will. And you're right, you have great transportation, as good as any other borough. You have solid older housing stock. And that's the second time, I think, in a month someone's mentioned the concept of people will be very happy to take an apartment in a building where they only have to walk half a block or less to the subway. Right. They kind of like scurry from the subway to the front door.
I think, if you take another situation, you take the Inwood, the Upper Manhattan area has a great opportunity. Inwood has great transportation. The retail is getting cuter, chicer, and so on over there. When we talk about Queens, something that nobody really talks about in Queens is near Aqueduct Racetrack. What's your thoughts about that? The casino's doing great.
Casino's doing great. I grew up a mile from Aqueduct Racetrack. And, it's a very mom and pop driven neighborhood. It's a very ethnic neighborhood now, Southern Caribbean and Guyanese and such on one side. And, there's a lot of highways.
Irish kids moved?
Well, some of them did, yeah.
Okay.
It's a good, solid, steady neighborhood, but there's not enough driven there. It's a light density zoning. So you're not going to see these 100-unit apartment buildings going up. It's
no trains.
No, there's the A train, but you're talking about an hour and a half to get to Midtown. So it's not really.
But you know what? That brings up another thing. I remember since I'm a little older, when we were talking about the Rockaways, it was a two-fare zone.
Two-fare zone.
Okay? The concept of the two-fare zone. How do you see the Rockaways? I mean, all of you are native New Yorkers. The Rockaways.
My mother and my sister live in Bell Harbor. And my sister's a lawyer in Midtown, and she has to drive to Brooklyn if she's going to take public transportation and take the subway, because if you're relying on public transportation, you're taking a bus to the train and going around the world. So it's not conducive.
I have a couple of folks who work for us at Meridian who live in the Rockaways, and their commute is hellish. But there's a common factor for the Aqueduct neighborhood, many parts of the Bronx, and the Rockaways. They're all, in many ways, transportation challenged, but there's one thing that unites all 3 of them. All 3 of these places are ripe to be destinations for retail. And the Bronx, the former Stella D'Oro cookie factory, is destination retail. People from Lower Westchester will drive to it now because of the big box stores there. The Aqueduct neighborhood is a destination for other reasons. And the Rockaways, increasingly over the years, is a place that has a resurgence of entertainment and bungalows in the summer. I'm very bullish on the Rockaways within reason.
So you and Mrs. Schechtman are going to move to the Rockaways?
I should be so lucky. As Donald Trump once said many years ago, we underutilize our waterfront in New York. And he meant that all along the 5 boroughs, all the way along Long Island. And if you think of the Rockaways, it's oceanfront.
But
Same ocean that you have.
In the Hamptons.
The beaches are beautiful.
Thank you.
Go back to Canarsie. Jamaica Bay is an idyllic body of water that's so significantly underutilized. There's so many opportunities for recreation and the quality of life. The same thing you talk about uniting those areas. So Belle Harbor, it might be hard to get there, but when you're home, you're happy.
Oh, no, it's beautiful in Belle Harbor. But what about Coney Island? I mean, Brighton Beach has done well. You've done well in selling apartments in Brighton Beach. What's your thoughts about Coney Island? I mean, even though my friend John Casmatidis has broken ground, but John has a couple of dollars that he can afford to risk a little bit.
Coney Island is like the promise that never gets fulfilled. The city spent $1 gazillion on the subway there. You have the stadium. You have...
Do you have the amphitheater now?
Yes. So that should drive activity, but for whatever reason, it still has not yet caught up. But I suspect it'll, as we've talked about earlier, how supply and demand and people run out of places to go.
So with a couple of minutes left, having 4 knowledgeable, top-notch investment sales, where are the opportunities for a buyer? You know, people always ask me, where should I go? Where should I go next year in 2017? As opposed to where the crystal apple is, where is an opportunity? Where can somebody possibly buy something and see some appreciation? David?
Quick answer. You cannot, you have to have a paradigm shift as a buyer. You cannot be in and out in 36 months. Provided you're a historical real estate person, I would go size and mass with industrial that has multi-purpose. Bronx, Queens, outer parts of Brooklyn, and anything M1 to 3 zoned, buy it by the pound. Make sure you have the financial wherewithal for a little bit of vacancy the next few years. Watch the neighborhoods rise and figure out your use inside of 7 years.
Mr. Jungreis?
I would shorten that to Queens. I just love anything by Woodside, Sunnyside, Elmhurst area.
And if you can go into a story, even better.
It's impossible.
Timmy?
I'm an out-of-borough bull. I agree. Brooklyn, Queens, the areas what people once thought were not the place to go is where you're going to find the opportunity.
So, like, which is the quick opportunity?
Sunset Park.
Sunset Park. Okay.
Sunset Park, I always call it the pimple between Bay Ridge and Park Slope waiting to get squeezed. There's a lot of good stuff that's going to happen there.
Timmy?
Elmhurst, Queens.
Why Elmhurst?
Long Island Railroad, 6 or 7 different subways, bus traffic. You'll be at the airport in 15 minutes. You'll be in Midtown Manhattan in 15 minutes.
Last quick question. Investment sales going to be greater in 17 as opposed to 16?
Yes.
Even though there may be interest rate hikes, even though there's a new president?
Yes, I like the president.
I didn't say, we're not asking any question about the president.
It's going to be an A- this year.
Okay, but with interest rates going up, may have an effect on the investment sales of residential. With rents not going up in the city for residential apartments, it has an effect over there. But later on in the season, we will return with all of you to bring your ideas. I'd like to thank Tim, Mr. Donovan, Mr. Schechtman, and last but not least, Mr. Jungreis. See you next week.